Greetings, it's Dr. Jeffrey Scott. This is my weekend market update, part one. I'm going to switch things up for a while on my weekly updates. It's summer here, it's boating season, and the way that I've historically done things, I build some lists on Friday night. I look at a lot of stocks on Saturday, and then I do a video late Saturday. But I want to go out on my boat. So what I'm doing now is I'm going to do the markets and industry and sectors and a few stocks that caught my eyes and recap a few of the things that I talked about during the week because, boy, there was a couple whoppers. And then on Sunday, I will talk about my three favorite stocks and work one up with what option spread I'm going to look at taking. So that format will go on for a while, whenever possible. I don't charge for these. I don't sell education. I do have a product to talk about, but I've been doing these videos long before I had anything to sell you. So I like doing the videos. I like helping my friends. I have a lot of friends that watch these videos. So we're going to try this new format. I got some good comments from last week, so I thought I'd do it again. Title this one, Markets Under Pressure, Trump Tariffs to Keep Fed on Pause, a question mark. It was great for the markets when he announced he was pushing it back to August 1st. But the Fed was meeting before then. So you wonder if that sends a message to the Fed now that, hey, maybe you ought to wait and not act so fast. So I think that's a negative, and I think that will cause the Fed to delay their rate cuts. But we'll see. Again, my name is Jeffrey Scott. July 11th, marketmripro@gmail.com, and my Google group is called Top Down Trader. Sometime on Sunday midday, I'll post part two. This is for educational purposes only. Anything I talk about should be taken in the spirit of education, not investment advice. The intent of the video is purely to show you how I apply the tools for top-down analysis. Trading involves risk, and you are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock I mention, and trading stocks and options should be considered risky. You should always consult with your financial advisor before making trades. I am by training, I'm an oncologist, which is a cancer doctor, which means my procedure is giving chemotherapy. I am not a financial advisor. I am somebody who's been trading. This is going into, I guess, my fourth decade since I've been trading, since the late 80s. I hate to say that, it's a mid-fourth decade. And I've had some really great people from Ian Woodward to David Elliott, Steve Bigelow, George Lee, who are no longer with us and who did so much at no cost and were always there to help me. So I sort of how I give back. Options are my favorite way to trade. Those that are here on tomorrow morning for that, my walkthrough workflow meeting will see that everything in my account except for one or two things are options, and you'll see how I use that to drive, frankly, three-digit returns so far this year. And you never want to say that without the stuff to back it up. So tomorrow I will show you my thinkorswim balance and positions and show you how I've done that. If you're looking for my stocks and docs video, it's not here. I do that with wealth charts. I'll do it over the weekend. You'll see it on Monday. This is going to be using my tool called Market MRI Pro. Join my Google group. It's called Top Down Trader. If you did, you would have known about the educational session. I offer it to the group first, and if I have any seats left, I will then offer them to a broader public. You go to Google Groups, you sign in with your Google ID, you go to all groups, search for Top Down Trader, then you let me know how you want me to reach you, contact you, etc. Is there a recession in our near future? I think that's always a question because bear markets in recessions are horrible. But as we've been talking for months, there will be a recession someday. And yes, the blue line, sorry about that, is the yield curve. The black line represents the zero line. And whenever we cross under, that's a yield curve inversion. And the gray bars represent recessions. And when do you see recessions? You see recessions after the yield curve crosses back up above the black line, but it doesn't tell you when, and sometimes there's quite a bit of distance. Things that might worry you is if you start to see a spike and it's come back down off this mini spike on the high yield option adjusted spread, give you a sense of tightness, or if you drop below minus 20 on the general activity diffusion index from the Philadelphia Fed. We've got one coming next week. It's projected to be down a little bit, but down, not down 20. When I look back in time, most of the recessions have occurred after a minus 20 of interest. We did get minus 20 a while ago in this cycle, but nothing happened at that time. News and earnings, it's a whopper week. And let me put 3 exclamation points. Look at what you got on news. On the left are all the Fed heads speaking that I had data on. On the right, we got the CPI complex on, well, nothing on Monday. Tuesday morning, we've got the CPI. We know that's going to be market moving because we're heading into a Fed meeting in a couple weeks, and I'm sure the Fed's going to be looking at that. We have producer price on Wednesday plus industrial production, capacity, the Beige Book, and more Fed heads. Thursday, we got jobless and retail sales, import price. Here's that Philadelphia Fed manufacturing survey, home builder confidence, and then we have a bunch of Fed heads. And then we have the preliminary, besides housing data, consumer sentiment on Friday, on Friday next week. And boy, if there's a big miss there, that will kill the market. We've seen that happen before. And then look at earnings. This is really the first big week. We got our buddy Netflix, which is pulled back some of late, but a big leader on Thursday. You got a bunch of banks and a smattering of technology and other stocks as well. So big week on news and earnings. As I say in the lower right-hand corner, it's a judgment call to hold stocks over earnings dates. It is bad judgment to not know when your stock's earnings date is scheduled. Market MRI Pro, this is my software tool that was built by one of my followers to help me to reduce the time it takes for me to do my analysis. It is $19.99 for year one, no more than $5.99 and probably less for subsequent years. It includes the data, all updates and upgrades of anything that I do myself. We have a number of educators that are lined up now to build add-ons as they do for other programs, and those will be separate. The data is real time, but we do not stream. Again, it's included. I give discounts if you've bought stuff before, but because my 4th of July special ends Saturday night, $300 off for 4th of July, $100 just by signing up to Top Down Trader, so nobody has to pay more than $15.99 this week. And if you've got my tools from Wealth Charts or TradeStation, then I'll give you $200 each off on those. So potential to get you down to $11.99. The trading session is Saturday 11 to 1. If you're an owner or a trial user of Market MRI Pro, if you've seen my tools or have my tools on any other platform, and the info is usually shared in the Top Down Trader emails, but as you'll see here, anyone wants to see how I doubled my trading account year to date, I'll show you a pic of the account, and I'll look for a link to the remarks section in YouTube or in your Top Down Trader Google group email. Again, I will show you proof on the doubling tomorrow, so it's not just words. But let me also be very clear. I have a lot of accounts. There is one account that I focus on trading, and I purposely made it, quote, small, $150,000 January 1st, and change. Okay, and there was a little bit of margin on top of that. I wanted to see if I could manage a small account. I typically manage accounts that are significantly bigger. And so I wanted to prove to myself that I could manage a smaller account, trade it relatively aggressively, and if I had double my money by the middle of the year, I would give myself a bonus and move more money in, which is what I did. And I'm going to show you how I got here. Again, look for the links to the remarks section in YouTube below or in your Top Down Trader Google email. And before you trust anything that I said about doubling my account, wait and look at it yourself and you can judge it. And I will show you the data there because I never talk about my performance. My wife is convinced that we just hit the top of the market because I took a snapshot of my Thinkorswim account. And she's probably correct. Um, but so many people ask me, I felt like it was the right thing to do. For more information, Market MRI Pro customer support, coding at Market MRI Pro. That's if you have the program, have an issue with installation, want to know compatibility. If you want to order it or get some questions about features, if you have ideas to add, that will be me, marketmripro@gmail.com. And think about joining the top-down trader group. And now on to the charts. I am seriously thinking about back-ending a John Person education program. He's doing, I believe, the 25th and 26th of October. He does his on Friday and Saturday, so let me validate the dates while I'm sitting here. Yes, he is doing it. Actually, he's doing it the 24th and the 25th. And a number of folks that follow me follow him. So we've done this before, and will announce this week whether I do it or not. Waiting for some more feedback from people who might attend. I'll hold one the 26th and the 27th down here in West Palm. Details to follow, but you'll get to go on my Stocks and Docks boat for dinner on Sunday night, which will be a lot of fun if you attend. So more to follow on that, and I'm pretty much ready to commit to it. All right, here's Market MRI Pro. I'm going to go through and show you my nightly workflow and tell you what I think about what's going on in the market. This is not a nightly screenshot. This is what I look at constantly. It's just at market close. It tells me here some of the ETFs that I like to watch that give me a sense of the market. And I see something I don't like already. Bitcoin on a roll up 4%. VIX, interestingly, up 0.5%. The dollar up 0.29, still down in its pattern. But look at the equities, and these really took a dive. And what really took a dive was small caps, with the Russell finishing down 1.38%. And I have a portfolio that has a lot of small caps in it, and that was a pretty rough day for the small caps. You can see diamonds were down half of that at 0.66. Spiders were down 0.35, the Qs were down 0.23. And when you look over here on the daily range, most of those equity indices are in the middle, but the Russell closed right at the bottom. And Bitcoin closed right up at the top. Now, on the new highs minus the new lows on the NYSE or the NASDAQ, looking at 12 months, we remain positive, but those numbers have come down. I like to think that bull markets are built on new highs, not new lows. Down here gives me, let's look at one-day change, the S&P 500 sectors. And you could see there was not much up today. You had energy and discretionary were up. Real estate was relatively flat. And the laggards were financials, healthcare, materials, communications, technology. The same growth stocks and leadership that got us here. So the rotation this week was pretty significant. Is it more than rotation? Have we topped? Do we still have a leg higher? Those are questions that I have, and we'll talk about that as we go further. This is an awesome tool over here. The S&P 1500, the NASDAQ, and the NYSE. Updates real time. Now, as I said before, we have real-time data and we stream it. But what you have to do as the user is when you want to look, you click on this and relatively fast it will update. I'm not sure it will do anything after hours. So, at each of these indices, during the day, you can look at sectors up versus yesterday. Ooh, that's one sector was up today in the market. Not a very strong a strong day. Only 19% of industries were up. Also not very strong. And only 20% of the S&P 1500 advanced. That is a weak day. On the NASDAQ, similar patterns on sectors and industries, and 24% of stocks were up. And on the NYSE, Similar pattern in sectors and industries, and only 29% of stocks were up. Well, when the stock's up in the market is in the 20s, it was not a good day for most portfolios. And frankly, if it wasn't for one of the picks I did earlier this week that finally moved on Friday, it would have been an ugly day for me, and that was AGEN, which we'll talk about today before we're finished. So imagine if during the day you take a quick snapshot, you could see what's leading in the market, what sectors. Down here are themes: silver, cannabis, metal mining, uranium, gold, Southeast Asia, aerospace, oil producers, MLPs. And we're really getting down in the barrel of how much they've moved. And if you look at what really lagged, cybersecurity, cloud, fintech, solar, genomics, biotech, cyber, software, home builders, boy, those are the things that were leading last week. So big rotation, big rotation. Is this a big deal and is it going to continue, or was it a 1 week wonder? Time will tell. Next thing I look at is my timing model. Interestingly, and this is the daily chart, and you can see we're kind of consolidating, going sideways in the spider, the Qs, a little bit sideways in the Russell, and definitely sideways in the diamonds. We haven't broken down. My timing model, which is at the bottom of the chart, and I'll talk about it in detail, it's not a secret, it's just effective, tells me we're in a buy signal on the spiders, the Qs, the diamonds, and the Russell on the daily. If I look at the weekly, I could see that, wow, what a V-shaped recovery, huh? Textbook. That we are still in weekly buy mode. So it's very difficult for me to say short this market. Do I think we got a pause here and we might pull back some? Yes, I've been saying that for days. Do I think that we're going to have a major correction? I think everybody expects Taco Man to kick the can down again in August. Eventually those tariffs may hurt. And if this economy starts to rapidly slow down with inflation, that's not a good thing either. But my guess is we still go higher, but I think we may have a pause here. If I want to look at the various index ETFs, I click over here. And what I like to do is grow them up, blow them up here. So, is there anything broken here? Here's our V-shaped recovery. This line was sort of that double top, triple top area, but that was the prior highs. We are above the 17, above the 50, and above the 200. Do I see anything that's broken here? No, it's still good. Maybe we're setting up a little triangle. And this dashed line is 10-year seasonality, which says the seasonality says we're still going higher. Now, we know September, October are not great times in the market. It looks like August is kind of sideways. So maybe we're going to pause here for a while. That certainly would not surprise me. It probably wouldn't surprise many of you either. But are we broken down here? Absolutely not. This is the spider, and the spider was down just 0.35% today. All right, what else can we look at? Let's take a look at the Qs. Not the NASDAQ. We'll look at NASDAQ later. But that's the Qs. Very similar. Prior highs were back here. So we've broken out to new highs. Make sure those are the highs. Yep. But look at seasonality. Have we broken down here? No, we're above the 1750 and 200. We're due for a pause after this big run up. Maybe we'll get a flag down to the 17. But seasonality is not negative, but it seems to flatten out pretty soon. So Qs look all right. What about the diamond? The diamonds. Got to keep my... Again, a very similar story with one big difference. We have not hit all-time highs on the diamonds yet. We have on the Qs and the spiders. Boy, we got really close here. So I kind of thought maybe we're having a flag here, and then we might break out. And I still think we go higher, but we may pull back, and pulling back to that 17 day, again, no danger, no damage, nothing wrong with that. It's part of a normal uptrend. But it will hurt for us that are in the stocks that are out of favor. And you could see sideways seasonality until we get into October and beyond. So is it time to sell here? I don't think so, but it might be time to get a little bit more defensive, raise some cash, and wait for us to work out this consolidation. The Russell, the Russell's kind of like the diamonds in that it's nowhere close to its all-time high. In fact, I believe, let me put that on here. And then let me go to monthly and see if that was actually it. Bop, 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 bop. Yep, that's the all-time high. I thought it was, but I wanted to make sure. All right, so back here, let's put that line back on it. Don't know why it went away anyways. It should have stayed. So we never got anywhere close. But the good news is we did fail at the 200, then we broke above it, successfully retested and broke out. Again, seasonality starting to flatten. So we're starting, at least on the Dow and the small caps, maybe to get less seasonal tailwind. But these have been the stocks that have been under favor, the least valued. So that might work in their favor. Do I see anything here that says this rally is over? I do not. Do I think a pullback to the 17? So the 220 area, 217. I mean, that is a very, very small pullback. That's a 2 or 3% pullback. I don't think that would be that damaging. Volatility, what happened to the VIX today? Markets were down, you'd expect the VIX to be up, and it was up. This is the VIX futures were up 4%, nothing big, and they're kind of down here where they languished for a long time before. This is when the pain is maximum, and it's when you're probably licking your chops and buying everything in sight. And I remember one of George Lee's favorite comments when he wasn't berating us for not taking the trades that he told us were great, was when the VIX is low, look out below. When the VIX is high, it's time to buy. Well, the VIX is low here. I don't think the VIX being low by itself is a signal as much as when the VIX is high and it pulls back. But, volatility typically doesn't stay low forever. And when the volatility goes up, the markets probably go down. And then the dollar, I've been watching the dollar struggle against this trend line. And let's just play around with it. I hate to adjust trend lines, but I'm going to adjust it. And I think that, I want to look at the prior high, which is that red candle. I think we are potentially could have taken out that resistance trend line. That might be a big deal. And we failed getting anywhere close to it, and we'll have to see. Now, clearly, the dollar is massively off the high. It was up today nicely, and up 0.3%. I think that's what it was. Let's look again. Yeah, but it's locked down in its range, but we'll see if that trend line break is meaningful. Now, if I'm buying a trend line break, I like to see it come back and retest and then go higher. So we'll see. We'll see what happens here. So the VIX and the dollar are not telling us bull, bull, bull. If we look at commodities, risk was off stocks today. It was on some of these commodities. You can see gold gapped up here and was up almost 1%. Silver has been the king. Silver is at not all-time highs because anybody knows silver and remembers those Texas brothers who I think they were burying silver because silver was going to go to the moon. And if you look at a monthly chart, you could see, boom, in 2011 when silver went to the moon. But you take out that craziness, silver is at a very interesting multi-year move here, and it gapped even higher. So it's been something to watch. Silver was up almost 4% again. And look at down here. It's got the magic 2 momentum dot signal. You don't expect to see that on a commodity, and pretty significant volume coming in. Silver very strong. Oil came off the highs. We'll see if it can hold above the 200. Nat gas is dead. And then if we look at the 10-year, I don't want to do it that much. Let me just make this a 50, 75. If you look at nat gas, it gapped, nat gas, you look at the 10-year, it gapped up, was up 1.68, and a big move up on the 30-year was up 1.89. If I had to guess why we saw weakness in the market today, the futures were up last night until the Canadian tariffs. What did he say? 35% tariff for Canada starting August 1st, and then there was something about a letter going out to the EU. Futures dropped and they stayed down. The market stayed down ever since. But I worry when we get up in this range here. I worry about stocks, and we're getting close. So something to keep an eye on, something that could destroy my bull thesis. Buckets looking for evidence of too many stocks above their Bollinger Bands or below. We shifted to the left, meaning yesterday these gray bars were filled with green, meaning more stocks were at the top of their Bollinger Bands. And today more of them are at the bottom than they were yesterday. So I don't see any signals less bullish than we were yesterday. NYSE, NASDAQ, Russell 2000, and the S&P. Market breadth. Try to take a bunch of the Ian Woodward tools and make a simple view. Here is the NYSE. Here was an all-time high on the NYSE. Again, how bearish can somebody be when you're at all-time highs? I mean, all right, it's going to come down sometime. And maybe it comes down this time all the way to that 50-day moving average. But we are just off all-time highs, and I'm not ready to hang the funeral crepes. If you look over here on the NASDAQ composite, just off all-time highs. So we are extended. We've had major move. We've had the golden cross, which is always late. Think about the move we've had before we even got that golden cross. If you look here, volume looks like it was pretty good today on the NYSE. And typically my source for volume, and it's not that I don't trust the volume on Market MRI Pro, it keeps updating as the night goes by. But the volume on the NASDAQ and the NYSE, according to Market Surge, was below average. So I guess that's good to have a down day on below average volume. You could see stocks above the 20 in green, 50 in white, and 200 in red turn down on both the NYSE and the NASDAQ. The new high, new lows, we already discussed, were positive. The advanced declines were negative, and the up-down volume were negative, and there were no new signals down here. Another thing that I like to do on the market breadth is to look at a couple other things to give me evidence. The green line, and we've got here the spiders, the NASDAQ composite, the Russell 2000, and the S&P 1500. So it's a different grid than some of the other grids I've showed you. This is a grid that I prepared. It's not a standard part of the program. But if enough people tell Praveen they want this grid, I'm sure he can add it to the program. Or you can make your own. What you could see here, and what concerned me last night on my video, is that new high, nominal new high on the spiders, and look at the RSI, it's come down. That RSI divergence is going to be seen across the board on each of the indexes. That is worrisome. The green line here is the stock 13-week new highs compared to new lows. When it gets to the top, the market always turns back. We're coming down off of overbought areas. Here are the same stocks above the 50, 20, and 200. And here are the respective AD lines. And what you do is you're looking for divergence here. And what I usually look for is at a bottom. At a bottom, do you start to see potential divergence before we bottomed, where the AD line starts turning up before the markets turn up? So same thing at top. So this shows me the RSI divergences remain in play, but some of the other overbought, oversold indicators improved. I have a seasonality tool built in here, and I just ran a quick scan while we were talking, looking to see stocks with at least a 7% move over the next month, 80% likelihood of being positive. And if you just rank them by edge, some of the stocks, and Carvana just has great seasonality this time of year. Woo. Um, but that's for another day. We'll talk about seasonality tomorrow on my workflow. So I'll sum up my market impression, which I apologize it took 30 minutes, but hey, I'm a top-down guy. Market's everything. Factually, I don't make stuff up. I show you the data. We've had long runs. We look could be toppy. My guess is we're more likely to have a sideways consolidation, maybe a small pullback. We got to work off that RSI divergence. I still think we go higher, but with the way tariff Trump is, God only knows day to day. I still am very invested, although when you see my account tomorrow, you're going to see mostly in cash, and that's because I just wrote a check to myself for $500,000 and put it in my trading account as a reward for doubling the account. That I fear I put more money at risk. Um, you'll see that tomorrow. Let's take a look below the market. If we look at ratio charts, it shows the strength in the market. Anything that's pointing, and these are Bitcoin versus the spider, and then you have the S&P sectors versus the spider. And we're going to launch soon customized ratio charts. You can make your own. Praveen has also promised me these are hourly, but I want daily and weekly ratio charts as well. The option of changing. Well, Bitcoin is on fire. Awesome Bitcoin. Other things that are doing well, industrials still holding up pretty well. Discretionary trying to improve, as are materials, and the big leadership has been technology, though not today. The defensive players of staples, utilities, real estate, and healthcare are coming up off the bottom, and utilities probably doing the best of those, and they're probably being dragged up by some of the electrical utilities and those companies that are partnering with data centers, because you've got some growth stocks in utilities now. Energy perhaps also trying to improve. Financials really had a tough week. Communication stocks had a tough week as well. I use it to give me a sense of what's going on, and not just today, but over a number of days. But the way I really digest the market is using what I call the JAS layout. So we'll go over each of these dots, lines, and what they are. But it's my tools of helping me identify stocks that I might want to buy. So I'm a top-down guy. You could see under the impulse, today we have 3,668 stocks in my universe. Believe me, I'm not going to look at all of them. Those are stocks from the NYSE, the NASDAQ Composite, or the Amex. They're all put into a data set. Each day we filter at $1 and 100,000 shares to get the real small ones and those that aren't trading out. And then I want to look at the rest. Now, each one of these stocks in this list has a sector and an industry group. When you don't see one, it's typically going to be an ETF. But every stock is, except for the ETFs, will have a sector and an industry group. So when I go into my top-down analysis and I look at all the sectors rolled up, I got 3,688 stocks. Therefore, when I look at top-down what's working on a very broad market, it's going to look different than it did on the S&P 500 stocks. So if I just go in here and I look at percentage move, what led on the day, it was energy, utilities, and real estate. That might match up, it might not match up. And then over here, I can rank industry groups. And what I'll typically, well, actually, I only got 3. Let me take these off for a second. This is all the industry groups, and there's a lot more red ones on percentage change than green ones. That's why I said whoa. But let's just look at the top 3, and let's take 1, 2, 3, 4, 5, 6, 7, 8, 9, and 10. So these are 10 industry groups. 1, 2, 3, 4, from the top three sectors, and they have 182 stocks. Now, the first thing I'm going to do is kill anything less than $5 or 500,000 shares. Now I'm left with 118. So if I really wanted to, and I look at about 1,000 stocks on Friday night, I'm just going to do it later. I could look at every one of them, but I have some tricks. One of my favorite tricks is to go back into the filter and add pullbacks and uptrend. This is going to cut the number in half. So a pullback and an uptrend to me, well, we'll just pull one that met the criteria. BP, it's been a horrible downtrend, but it's in an uptrend here, and it pulled back. Here it pulled back again. So it requires my long-term trender to be blue, and that within 9 bars I had a pullback and a recovery. So these are the pullbacks and uptrends. Now I'm going to rank them by impulses. And let's just see if any of these look interesting. Next. Ooh, looks very interesting. It looked more interesting yesterday. But here you have a nice uptrend, a breakout on big volume, got volume, breakout, momentum, you got strong relative strength, OBV is strong. It says it's extended, but when my eyes look at it, it's a cheap stock. It's not that extended to me that I couldn't chase it. It doesn't make money. That's a bummer. Its last earnings season, it had a good year-over-year growth. And a surprise, it's projecting 38 cents versus a prior minus 39. So really nothing here that's exciting. So then maybe I better look at the news. And up here we build in the news. These two look good. This is Zacks. We can open it up here. It'll give us what Zacks had to say. And you can read more. And I'm not going to go through the whole thing, but there it is. Next decade. All right. So at least they thought something good about it. And then this was from 2 weeks ago. And they tell you this is from Seeking Alpha. So it's a great way of doing research on your stocks and seeing if anything happened. So I might look at this. I do like the breakout here. I don't love that it's extended by my numbers. Let's see what the number is. Yeah, it's extended. And when I see that, I typically expect to see it pull back. You wonder what the seasonality is? Yeah. Next one is Welltower. This is a REIT that a lot of physicians and other medical buildings sell their buildings to. It pays a small dividend, 2%. It's a very steady performer on earnings. Revenue is going higher. It's obviously a safe play. It's been going sideways pretty much all year long, although it did have this deep here. What a great opportunity to buy there. Seasonality is fine. It's interesting. Am I going to run out and go crazy on it? No, it's not that exciting, but it's not bad. Omega Healthcare is another one of these medical REITs. This one pays a 7% dividend. CNR, Canadian Natural Resources. Energy has been down for a long time. This is Core Natural Resources, not Canadian. Don't know the story here at all. If it's got my 2 momentum dots in a row, which is one of my favorite things. Probably an IPO, and that was an old ticker. That's not good. It's been making money. It's projected a loss here. Revenue, this was May, I'm sorry. Don't know when the next earnings are. Sometime soon, I would think. Don't know anything about it. I'm not that excited. UUUU is one that I own. It was one of the cheaper uranium plays. It has this recurring zigzag. It's about to zag down if it keeps up when it's done. Uranium is hot right now. You can see it's got good seasonality here. I'm still holding that. TTE, Total Energies. Again, I look at these and I see downtrends. Short-term uptrend doesn't excite me. REXR is another REIT. So I could go down this. I don't expect to find great, exciting things. This is one that is interesting, Warrior Metal coal. Coal, fundamentally, who wants to have coal? But it pays a small dividend, and you can see we're going into strong seasonality during the winter for coal. Um, that's how I do top-down analysis. It's not always the most exciting, especially at market turns. Another thing I could have done is just looked at the top industry groups regardless of what sector they were in. The other thing that I like to do, and let's turn off the filters so I don't, is I like to do bottoms up. And in a bottoms up approach, I am going to look at the larger body of stocks back to that 3688, and I might do the same thing of clicking pullbacks and uptrend, $5 and 500,000. And the way I explain the impulses is simple. When I was an internist and studying before that, and even as an oncologist, cancer doc, I would do EKGs on my patients. And those EKGs would give me these squiggly lines that would give me insight into the damage or lack of damage of their heart muscle. And that insight is how we would make recommendations. Do we cath you? Do you go right to surgery? Do you go home because there's nothing wrong with you? Well, I looked at what things drive stocks. Well, if you think about a stock chart, you got price volume, you got how much they're changing, but everything that's been built is some based upon price, volume, and time. So I have a series of dots. The bottom one, the yellow line here is the squeeze, and above that, those dots are coming out of a squeeze, so I can search for things that just came out. But I look at simple stuff: momentum, breakout, volume, and gaps. I have two trading systems up here, CPR and an EMS. All this to be explained bigger tomorrow. This thing underneath the squeeze line is a Wilder PSAR. If it's a blue dot, it means it's a green candle low. If it's a red dot, it's a red candle high. If you don't know what those are, you'll learn tomorrow. I want to look for pictures. So I'm going to count up how many dots of the CPR, the gap, volume, breakout, and momentum, and it's a special type of gap published by Morales and Katcher, but how many of those are firing at a given time? So if I have a stock in a uptrend, it pulls back, and then it has a bunch of dots as it's breaking out, that's what I want. Red Cat, RCAT. This one had a good day, up 26%, and make sure we're on daily. So is it in an uptrend? It's in an overall uptrend, all right? Did it have a pullback? It did. And here was a nice move off of, well, the 200 and the 50. It had massive volume. It had a CPR signal. We lost the negative EMS, so it had a new early signal. And then it had a gap, volume, breakout, momentum, relative strength, and OBV. The way I look at them, both increased. Seasonality, 5 and 10 year, it's okay. It's not awesome, but that looks interesting. Now, what news happened today? Uh-oh, is it being bought? Well, you never see these shareholder lawsuits, but when they all come in like this, sometimes there's a reason. Is there a takeout? Oh, fraud. Never mind. Once I see the word fraud, I don't look too much further. All right. ATRO. The rocket stocks were up today. So here's a stock, ATRO, nice uptrend. Pull back to my favorite place to reverse, which is the 50. Big volume move with a gap, CPR signal, and then you had volume, gap volume, breakout momentum, relative strength, and OBV. This one looks interesting to me. I keep going down. UMAC, another one, unusual machines. I wonder what they do. Nice breakout today. Notice the dots here. So I can work my way down this list to see if anything meets my criteria. This one looks interesting. What is this? PSMT. What's it called? Price Smart. Okay. I probably should know that. Is it an uptrend? Absolutely. Did it pull back in a big move? So again, I might look up here. Was earnings today? Nope. Earnings were yesterday. So earnings, they had a small beat on earnings, but not a surprise. But they also beat on revenue. And Wall Street must have liked them. 2.46% dividend. You can read the news yourself, including often we'll have the presentation. CFO trend, that's a while ago. Strong momentum, comparable sales growth, strong through membership growth. All right, well, maybe there's a story here. It's not Costco, but it makes money and it's got some momentum here. All right, that might be the best one I've seen. HROW, Harrow Health. Don't know anything about these guys. Here's that Next, which we looked at on the top down. So I would typically go down this list. But for a lot of us, that's too much work. So my best way at finding winners is to take this 2 days Momo, put my price and volume. I'm not sure we'll have any today. These are stocks that I typically spend some time looking at. UMAC, here's that unusual machines. Big volume, all my blue dots, relative strength and OBV. It is not old enough to have a high jump, so it must have been an IPO or something back there. Let's put the weekly on just to see. Monthly, yeah, it's an IPO a little bit over a year ago. Okay, back to the daily. Run up, pull back, breakout. I like that. Now, this is risky because when you have a move like that, what you might see the next day is to filter down a little bit before it goes higher. That's how flags are formed. EasyPW, pawn shops. I remember when this was an IPO and one of my brokers put me in it a long time ago. And the price has not done much since then. So easy, come on, EasyPW. Wake up, machine. It must be going through another data update because it seems to be slowing down on the stock charts. All right, it popped. So you can see EasyPW, not my favorite stock. It's way down in the pattern. It did break above the 50. Seasonality looks okay. Nice pattern of dots. But all these have to have these two dots above the squeeze, 2 momentum days in a row. People that have been watching me have been seeing how many winners come out of this. Ventas, if I remember correctly, it's a REIT that does nursing homes and other healthcare related and probably pays a dividend 3%. Steady Eddie on earnings, steady Eddie on revenue, safe plays in volatile markets. MAG has got to be a silver. We showed you how strong silver is. Is this a small market cap silver company? Floats, it's a 1.4 billion market cap, teeny weeny dividend, but nice move. I mean, silver looks great. This kind of reminds me of the silver chart. CNR we looked at before. Century Aluminum. Notice a lot of material stocks here. Junky looking chart, a breakout today. Not that excited. Here's the one that I talked about. Last weekend, I think I talked about AGEN. I'm certain I did because I drew this line. And I talked about this was one of the ones that I would have looked at but would not have worked up. It's too cheap to work up for an options play. And what I would have said was, I'm going to set a buy stop above the high of the day. And if it breaks above the high of that day, I'm going to take this stock. And the reason I did that, and again, it's cheating. I'm a cancer doctor. You may look at this and see 42% 2-year survival in refractory MSS-CRC and say, so what? I look at this and say, that should get them to $500 million in market cap. I looked at their market cap and said, their market cap is 58 million. Somewhere else I looked at, it was closer to 200 million. Or, well, maybe that's wrong. But I'm looking at that. We can figure this out. Well, maybe we'll look at it. I'll figure that out for Sunday. Regardless, the market cap is much lower than it should be. This is an undiscovered, under-owned healthcare company that has a potential drug that could do $1 billion or more in sales, being priced here at $58 million. What I've seen over the years on these one-off companies is once you get positive data in the phase 2 setting, they get a pop and maybe a $200 million valuation. If they get positive data in the phase 3, they may get a $400 million valuation. And if they get approved, then they can run their way up to $2 billion. The stock's too cheap based upon valuation, based upon that data. So I actually, on my YouTube video, I talked about it the other day. I said, I'm just going to draw a line and take off these tops and ignore these 2 days, news-driven days. And it took it out yesterday. I bought my first piece actually on the day I talked about it when it got below $5. I thought it was just stupid. I bought more yesterday and we had a big move today, which is why my account was up. I'm very happy with that, and I closed the position I bought down here for a decent gain just to start taking off my risk. PAAS is another silver stock. This is probably a better known silver stock. Pays almost a 2% dividend, 7.34 billion market cap. All this stuff is built in. That's why I love this program. That looks good. All right, we're at 51 minutes. This is like a regular video, and I'm still doing one Sunday. Sorry about that, folks. Let me just show you 3 stocks that I'll probably be thinking about on Sunday. Why are there no FANG stocks? Because I have my filters on. Here we go. Amazon. Is Amazon ready to break out? You could see this looks like the market and a bit of a flag and a breakout today. We're in the midst of Prime. There was some original that they were doing poorly came out, and then that was retracted. Is it going to run away here? Will they have good Prime numbers? I think Amazon looks good here. When are earnings? Probably in 2-3 weeks. Earnings are August 7th, $1.32 versus $1.43. But you notice double-digit surprises every time on earnings, they sandbag. All right, another one that looked good today was Google. And I think I'll just look at those 2 and save my other for the weekend, for Sunday. And here you go, beautiful uptrend, pullback, and a breakout. It had a breakout dot. I like the company. You could say take out this high, trade above this high, and that might be a way to protect yourself from gap down Monday. It failed at it today. I think a breakout above this number, you got a cup and a handle and you get that breakout. So I think Google and Amazon look really interesting here. I'll see you guys on Sunday, and I'll talk about how I would trade Google perhaps. Thanks everybody. I will put the link to the video. I'll show you how I hate being a braggart. I did it to get interest and to people to come to my video. You probably can figure that out to my seminar. But it's true. You'll see the data tomorrow. But I think I've got a tool here that allows me to shorten my time for analysis, serve me up some attractive stocks. But it's really about what you do with them. It's not, no program is going to make you money without the knowledge of how to trade. And I'll talk about how I trade options on Sunday. Take care, everybody. Enjoy your weekend. I will.